Oh, hi guys! Today we want to have a look at the end of month rally. Does the end of month rally still work? Does it really work? Is it something that exists? We know about the end of month rally, we have probably heard about that, and we have heard about that on the US markets. Well, so we go out there and test. Here we have the mini S&P 500, which is representative of stock market, and as an entry we use the number of days before the end of the month as an input. How many days before the end of the month shall we enter? And we close then the first, which is the last, well, 1 day is left, which is it exits the first day of the following month. So we run an optimization to see how many days are the best solution. And we go from 2, not 1 because we exit on 1, and 22, which is the number of working days, of trading days in 1 month. Or we could use 23, but it doesn't really matter in this case. Here we have our results. Let's see a chart which is better. Okay, here we are. So we see gains, which is good, and we see a wide zone with good profits here. Really good profits, and also here some other winning scenarios with a shorter number of trades. Here with 16 or 21 or 13 are those where we would feel more comfortable. But let's have a deeper look inside. And here we go. Okay, so 16, as said, is the best result. We have now to analyze what the performance report looks like for this result. And here we have a report. Let's see. Okay, the equity line, some drawdowns, but generally is looking good. Starts from 98 when the mini S&P 500 was born. So everything looks fine. And what is a bit or might be a problem is the number of days we sit in the market, because we just enter and exit at the end, or better said, at the first day of the following month. So 16 days in advance means 15 days. Here we measure only the days of full presence in the market. So when we close, we don't measure it. But okay, let's say 16 or 15, it doesn't really matter. It's a lot. This is the matter. It's a lot. And if we look at the average bars in trade for all the best results, we see big numbers, large numbers. What is not bad is this one here, 4. Only 4 days in the market, and the profit is not really bad. I would say it's good. It's good, and it's not far from the best result. So I would definitely take this, because 4 bars in the market is much better, has much lower risk than 15 or 20 or 12, simply because we keep our money in the market for a much shorter time. This is very simple to understand. The shorter the time we stay in the market, the smaller the risk. This is the equity line. The drawdowns are gone, I would say. But okay, I mean, this is something we could see. We have $10,000 drawdown here, and we had about 3 times as much with the solution leading to the best, here it is, to the best overall result. So I would definitely take this. This is certainly the best result, and it also confirms the end of month rally, because we enter actually towards the end of the month. The average trade is good as well, so everything looks good. But in spite of this, I'm still wondering if there is something we could improve. This is the yearly result. What is astonishing maybe here is we lose money in 98. It's astonishing because 98 was one of those years in which whatever you did, you made money. Here, this thing loses money. Okay, never mind, because generally, especially now in 2019, things look very, very good. what could we do actually? But is there something we could do to improve? You have always to be curious, to test. So I would say, yes, I want to test something. And in particular, let's take the flag off here. Okay, in particular, I use the same entry, but with an additional condition. The additional condition is, end days, okay, I enter only if there has been a pullback. If the close before entering is below the midpoint of the monthly range, of previous monthly range. It's a pullback. I enter only if there has been a pullback. Obviously, I could measure this pullback in different ratios. I here put the midpoint divided by 2, but you could use any other value and you could test. But I just want to identify the concept here. So I take the midpoint, which identifies the concept of pullback, and maybe there are much better values to take for our purposes. But this is what I do, and I immediately test this idea very well. We make more or less the same amount of money. I don't remember exactly how much we did before, but here you see that drawdown is now much better. The equity line is similar because the numbers were good as well already before, but this looks definitely good. So I would say we are done, not completely, because I would also add a stop loss just for to protect against a marked crash. And this stop loss here, this is a parameter, my stop, is based on the average true range on the last 5 bars before entry. So when we have a setup, we take the average true range of the last 5 bars, trading week. We multiply it by the input. These bars since entry plus 1 takes the bars before the setup. Believe me, don't argue about the programming here. It's what I'm telling you. And so we take, when we have the entry to entry, the last average true range of the last 5 bars, and we multiply it by 2. By 2, actually, literature normally uses this parametric stop multiplying by 3. But here we have such a short time in the market that it would not make real sense to take a multiplier of 3, in my opinion. So I take 2. This is just a safety stop loss. And we make same amount of money. Drawdown is a bit worse, okay, never mind, just a bit. But for sure, this is the equity line, looks good. For sure, this is a safer solution. Year after year, it makes money. 98 became a winner here now, which is good news. So we are also happy about this. But generally, looking at the overall results, we are more than happy with what we see here. So we can state that the end of month rally is true. It works and it makes profits on the US stocks market. Entering after a pullback leads to even better results, as we have just seen here. We have tested this on the mini S&P 500 future. We can obviously use also something else, a mid cap, for example. What is it here? Okay, let's see if it works on this one as well. Profits, which is good. Equity line is good, not as good as the mini S&P. Probably more volatility here wastes a little bit the equity line. Let's see on the Dow 30 stock market directly. $50,000 pro trade on each stock. And let's see what happens here. These are obviously, it's not a survivorship bias free. These are the stocks which we have today on the Dow 30, but it's just a test. Good results. And here is the equity line, a very, very nice equity line. Here, obviously, we go back in history because stocks were there before the mini S&P 500. It's good to see that profits were there also before 98. So the end of month rally does work on the American stock market. This is very important. American stock market. Don't ask me, does it work also on cotton future, I don't know. Euro US dollar. Okay, let's test on Euro FX. This is not the code. Euro FX, completely different market. It should not work. I mean, maybe now we found incredible profits. I don't think so, but let's see. Okay, it loses body, bad equity line. This is for the American stock market. It's a bias on the American stock market. If we test, for example, this is very interesting, on let's say the DAX future, European future, okay, which is correlated for sure, but profits are shown, but the equity line is worse. I mean, I would not like to trade this, personally. So the American US stocks indexes or stocks are the best for this. The DAX stocks, as we have seen the DAX future, can we test it as well? And I think we will find similar results to the DAX future. So let's see. It makes money, okay. Drawdown is a bit high. And you see, this equity line is not nice. I mean, I don't consider this nice. So, US stocks markets. This is where the end of month rally works. It does work, has been working, and still works. Please write in the comments your experience about this or other bias setups you might have traded. This is an example of what has been told for years and that actually does work. Ciao from Andrea Unger. Enjoyed it? Click the link below and you will be noticed as soon as new material is available.